If you have been following the financing towards fintechs in Africa, then you know Kenya received one of the biggest chunks of financing for from venture capitalists, particularly of money that was coming to finance startups.
Yeah.
And the chunk of that was taken up by fintech.
Yeah.
We keep seeing this happening every year, each year, and it's very, very interesting to see. Last year, when we had this conversation about financing in the fintech sector, we talked about a lot of things. There's been development, there's been new emerging technologies like artificial intelligence, machine learning, and the like. Just how are they blending into making your fintech experience better in Africa and so much more? Hello there, welcome to Africa's biggest tech conversation and show. My name is Brian Jodutieno, NTV's in-house techie. We have this and so much lined up for you. The conversation today is the future of fintech in Africa, of course, and beyond, because we are targeting those diaspora remittances that are coming to East Africa and so much more. But first off, as always, the tech news of the week. The recent Paris AI Action Summit brought together global leaders, tech experts, and policymakers to discuss the future of artificial intelligence. Here then are the key takeaways from that conference. Divergent approach to AI regulation as a significant highlight was the refusal of the United States and the United Kingdom to sign a declaration promoting inclusive and sustainable AI. US Vice President J.D. Vance emphasized that the excessive regulation could stifle innovation, advocating for a more laissez-faire approach. In contrast, other nations including France, China, and India endorsed the declaration, underscoring a commitment to ethical and inclusive AI development. Equally, there were major investment commitments. Now, the summit witnessed substantial financial pledges aimed at bolstering AI infrastructure and research. France announced over 109 billion euros in investments from international entities to advance its AI sector. The European Union equally committed 50 billion euros to enhance AI capabilities across member states. These investments reflect Europe's ambition to remain competitive in the global AI landscape. Up next was the global disunity on AI governance. Now, the summit highlighted geopolitical tensions, particularly between the United States and European nations regarding AI governance. The US criticized Europe's regulatory frameworks, such as the Digital Services Act and GDPR, suggesting they hinder innovation. This discord underscores the challenges in establishing a unified global approach to AI regulation. Lastly, environmental and ethical considerations. Discussions also focused on the environmental impacts of AI, especially in energy consumption. Experts called for the development of energy-efficient AI models and emphasized the importance of ensuring AI systems are ethical, transparent, and respect human rights. In summary, the Paris AI Action Summit underscored the global community's recognition of AI's transformative potential, while also highlighting differing philosophies on regulation, investment, and ethical considerations. Welcome back. Now you're up to speed with what's been happening in the world of tech. Francis from Tuma joins me for this conversation on the future of fintech in the world. Francis, good to see you.
Same here, same here.
Fintech adoption is growing in Africa. What is the future looking like for developers like you who are providing solutions towards remittances, payments, and other fintech services?
Brilliant, brilliant. I think what most fintechs have been able to figure out, and why we've seen such a huge adoption of fintech over the past couple of years, is because they realized that when you're trying to push for financial inclusion, you apply a behavioral strategy, not a tech strategy. It's a behavior issue that is supposed to be addressed, right? So from a cultural perspective, most Africans will not necessarily trust easily, right? Security, because of so many scandals here and there, has been an issue, right? Transparency has been an issue. So what has happened is, over the past couple of years, these fintechs have come up and they've actually applied behavioral strategies that have actually enabled customers to trust them more. They have enabled customers to be able to see the transparency in terms of pricing. and actually address their innate needs. That's why customers have been able to actually hand over their money and be like, we trust you, and now we are working with you. And the adoption is happening very fast. I think I see some of these traditional banks, and as much as they're doing a good job, you'll take a typical tier 1 bank will take like 20 years to hit revenues of like maybe $20 million. A fintech will come over. In 5 years, they have surpassed the revenue, and they are in all these countries. Why? Because they've managed to localize the experience, right? They've asked the guy in the remotest part of the village, what is he experiencing? Like, why is he hesitant to, for example, give money to just any other guy? So fintechs address that, and they've made it possible. And I believe we are about to see a huge, even much bigger boom, especially across Africa, because now with the likes of TikTok and all that, the information is spreading. There's much more trust. People are able to now realize, okay, as much as I've been banking all this time with this specific person, yes, there's someone else who's actually addressing my needs in a much more personal manner, and they're shifting, and fintechs are taking over.
Since we had this conversation last year, of course, with another guest, there's been a lot of development around artificial intelligence, blockchain, and other emerging technologies like machine learning. Just what is that extra source that these emerging technologies present to the fintech sector?
So I'll give you an example. There's a specific huge bank I did a consultation for a while. And almost 70% of the queries that were coming into the call center were password resets, right? So customers are calling, I've lost my password.
Oh my God.
Please reset. So you have a whole team dedicated to helping people reset their passwords. And this was as recent as 3 years ago, right?
No way.
Yeah. So what you're saying is, with technologies like AI and machine learning, most of these tasks become automated, right? So what you're seeing is it becomes much easier and much faster to serve customers, because customers do not need to wait in a queue. They don't need to do all these things. Everything is automated. They can do it on the app, right? And then, of course, now, especially now from a fraud perspective, because fraud evolves over time. And what happens is you're able to build machine models or AI models that are able to detect fraud, right?
Yeah.
So if a kid in JKUAT that is renowned for hacking apps comes up with a new way of accessing mobile banking, I think it's a rule that you can actually specify on an AI model such that if someone else tries that, it learns over time, and it's able now to secure your app. So these technologies are playing a key role in improving efficiency, security, and also now, of course, the overall experience of the customer on the app.
Great. Let's introduce the question of financial inclusion. And this has to do with the unbanked society, which the sub-Saharan Africa largely still is. And the biggest question, even without the technology, the biggest question without even how much your deposits are earning interest, the biggest question is trust.
Exactly.
For somebody to move money in cash and deposit it in a digital tool,
Exactly.
in this case a fintech, they need that element of trust.
For sure.
What is the opportunity for fintechs to develop trust in the clients they serve so that they can reach that very vital market?
So one of my favorite books is called Culture Making, and it speaks about how do you change the culture of a people, right? And I think one of the examples that the writer has put that I apply a lot, especially when building products, is if you want to make people stop taking horses to work, just invent a car. Don't try to take it away from forcefully take the horse away from them, just invent a car. And essentially what they are saying is, if you are able to create something that serves a need in a better way and communicate that consistently to people, they will gravitate towards it. I think, yeah.
Sorry.
One of the main challenges.
Yeah.
Exactly.
Yeah.
That's a very, very brilliant example.
No, I mean, you find something is working and then now
I know, forcefully you want to move me.
Yeah.
You've not understood my needs, right? It's crazy. Yeah. So I think one of the main areas that I feel has really been missing with most fintechs is they do not know how to implement behavioral strategies, right? Trust is a behavior issue, right? So when I say I don't trust you, what I'm saying is I need more transparency in terms of how you're pricing me, right?
Yeah.
What I'm saying is I need more insight in terms of who you are. So, okay, so who is behind this product? Are they people, is it someone I can trust, or is it someone who will wake up one day and disappear, right? So it's actually a behavior issue. So most fintechs, where they're missing it wrong is they just apply tech strategies. They just come with this brilliant product and they say adopt it. They're not taking time to tell them, look at what we've done to make sure you are actually secure in terms of your transactions. Look at some of the partners we've onboarded just to make sure there's security in your transactions. Look at the user experience, the amount of time we are taking to just make sure we are listening to you, and we've made it very easy for you to actually enjoy using our app. Yeah? So some of these conversations, fintechs are not having them. They're just happening within locked doors, and customers are not aware of some of these things. I think for us as Tuma, we are trying to make that different. And the reason we are doing some of these things is to just show them there are people behind this brand. We are trying as much as possible to solve a very clear solution, which is making sure international payments are done in a very local way, as if you're here, so that at least this customer believes that this person who is a Kenyan like me or who is an African like me is able to, is addressing some of these needs.
Some of these solutions. Great. We still have the challenge in Africa of integration and multi-operability. What am I talking about here? This is basically in terms of APIs and rails for integration. So you find somebody sending money from Kenya to say Botswana, and it takes 4 or 5 days to get there because we don't have those rails, and especially open source rails and affordable rails while talking about that.
For sure.
So the question is, what has the development been like in terms of getting rails and APIs for integration across borders? We'll talk about the regulation later because that's a totally different conversation.
For sure.
This has been a conversation that people have been having, the tech community has been having all this time. Has there been any development?
Yeah. Yes. So there are technologies that have actually come up.
Open source?
Yes, open source. So I think one of the main ones that I'll highlight on this particular one is called open banking, right? So open banking enables you to move money from your account to someone else's account with utmost security, without necessarily exposing your card details. So I'll give you an example. I have like 4 mobile banking accounts, right? So whether it's this brand, right? I want to send money to you. Typically, the traditional way is to take my card, link it to our app like Tuma, and send the money. Customers will be a bit hesitant because I'm giving my card details. What if someone fetches those details and tries to do some transactions somewhere, right? So ideally, with open banking, it enables you, so the user experience is, you are able to just say, I want to move £100 from my wallet to your wallet. So what happens is with open banking, it automatically tells these mobile apps, come on top, please put your username and password, and you'll be able to move money from your account to that account without exposing the card details. Yeah, so I think that's one of the technologies that we are applying in Tuma. And essentially what that means is customers feel, for those who are a bit jiffy about sharing card details and the security and all that, there's a bit more reassurance that there's security on that area. We have technologies like 3DS. I think 3DS is very important. It's not per se a new technology. It's more of a new policy that is put in place by Visa and MasterCard to ensure every card that is about to send money, there's an OTP that is sent by the original bank to the person who registered it originally. They have to authenticate. So if today you steal a card, try to do a fraudulent transaction, you will have also to steal the phone number of the guy that you stole the card from, so that you access the phone and get the OTP, which makes fraud much more harder to implement. So I think some of these technologies are improving security and making some of these like integrations a bit much easier.
Great. You're here courtesy of Tuma.
Yes.
Which has gained that very vital license to operate in Tanzania.
Yes.
Clearly very excited.
Yes. I'm holding myself, I don't dance.
Unajimanage.
I'm managing myself.
Good stuff. There's a challenge, or rather there's an opportunity, depending on how you see it. Tanzania is still a cash-based economy compared to the other East African markets, Uganda, Kenya, Tanzania, and by extension Rwanda. Just how do you plan to crack that very cash-based market? What's the strategy around that?
So, number one, we want to start where the customer is, right? Okay. Our very first strategy is to check what are you using. So mobile wallets have huge penetration in Tanzania. Okay. So we want to make sure we're able to terminate the mobile wallets.
Okay, so here we're talking Vodafone.
Exactly.
And
Momo,
yeah,
exactly.
Okay.
Even M-Pesa. Yeah, so we want to leverage on some of these rails to be able to terminate those mobile wallets. So we start there, right? Yeah, sure. Then we start working the journey with the customer, right? So essentially we start leading them towards what we believe are superior technologies, like now being able to pay through QR codes, right? Yeah. Are they able to go to a merchant and just maybe through a QR code swipe and money moves from their wallet to the merchant? So those are some of the technologies we want to apply, but we want to start where the customer is, where the mama mboga is, so that there's relevance. Then, once the trust is built, now we start introducing slowly new technologies.
Great. Congratulations, and thank you for making time for us on TECHOVER to speak about the future of fintech. Really appreciate it.
No, I can't clap.
No, it's okay.
Oh, okay. Thanks, man.
We've been speaking to Francis Kamau of Tumor Fintech on the future of fintech in the world and in Africa. Just speaking about cross-border payments, settlements, and remittances, how that is going to look like in the era of artificial intelligence, machine learning, the integration question, and of course regulation and financial inclusion. That's a fair point to take a break. We'll be back with more. Don't go too far. Welcome back. You're watching TECHOVER, Africa's greatest tech conversation and show on NTV. Time now to know who our founder this week is. And this particular group of founders, they're not necessarily startups, but they are in Series B kind of startups. So let's just say they are Series B, businesses. These were startups under the Massachusetts Institute of Technology Foundry Factory. And they have been on this program for quite some time, just trying to raise solutions for African leadership issues. And this is the story of the first one from South Africa. Africa's population growth has driven the need for, among many basic needs, the need for reliable energy. According to the International Energy Agency, IEA, more than 600 million people in Africa lack access to electricity, and nearly 1 billion lack access to clean cooking. With Africa's goal of providing power to 300 million people by 2030, entrepreneurs are already creating solutions towards this in a bid to narrow the gap of the unreached. One such entrepreneur is Linda Mabena, the founder of DLO Energy, a renewable energy firm that generates energy from windmills in South Africa, operating across the continent.
So I started the company, or started ruminating on the company when I was 23, and back then renewable energy was what AI is today, or what fintech is, for most startups, right? But the challenge was it didn't follow the typical venture capital formulation, meaning that it's infrastructure, so it requires a bit of patient capital. So one of the key things I found from an early stage was the challenge around fundraising. So I know a lot of entrepreneurs on this continent always talk about access to finance, but they don't unpack what that means, right? So in my sector, there's a lot of capital. There's a lot of debt capital. There isn't enough equity, or the equity is very expensive, or priced out. So even if a bank gives you a $100 million loan, you still have to put in 10% of that in your own unencumbered cash. And that's where the gap lies for young entrepreneurs to be able to enter into the sector of renewable energy or to scale at the pace at which they should be.
Founded in 2011, DLO Energy currently owns Africa's largest wind farms, powering up to 300,000 homes.
So it depends. Luckily, we do business across the continent, not just South Africa. So I'm quite familiar with most of the regulations across the continent. South Africa had a very good first mover advantage in sub-Saharan Africa because one of the things they did when they were formulating the regulation was to work with the banks and the private sector to say what would produce a workable, bankable model for you as the banks. Because sometimes you find regulators go and regulate by themselves without getting the assistance from the private sector who are going to have to work within those regulations. What you find in other countries like Nigeria is that the regulations were there. However, there was no government guarantees put behind the national bulk buyer to make the projects feasible, right? An investor comes into your country, they want to put the money in, but they also want to make sure that they're going to get paid. So those challenges around how do we get our money out, because most of the state utilities across the African continent are bankrupt or they have very poor financials, meaning they can't be deemed bankable by any sort of bank.
The cost of energy in Africa's households and as a manufacturing component remains unattractive to most entrepreneurs and increases the household expenses. Linda shares that energy infrastructure that powers renewable energy may be a huge panacea to the rationalization of the costs to include more users.
Where I think the challenge that needs to be addressed on the renewable energy sector is that we are importing finished products. South Africa alone imported 17 billion rands worth of solar panels last year, in 2023. The word is import. We did not manufacture. We didn't create any jobs locally in that portion of the value chain. Yes, we created a number of jobs through construction, through the ancillary businesses. But if we're going to be serious about decarbonizing by 2050 as a continent, we need to start having a serious discussion around local manufacturing capability and also creating some of these technologies locally as well. Otherwise, we're going to find ourselves in a serious challenge when it comes to jobs.
Besides her business prowess, Linda appreciates being part of the MIT Foundry Fellowship that made her and other partners focus on the leadership aspect of influencing policy and business decisions in Africa's development.
Let's start with a key statistic. 70% of the world's cobalt comes from the DRC, the Democratic Republic of Congo. Cobalt is a critical mineral that is used for electronic vehicles as well as your battery storage. So as the world transitions, battery storage is going to be a critical element because remember, renewable energy is intermittent. Now, here's another interesting figure. 19% of the DRC is without electricity. 19% has access to electricity. The rest of the country doesn't have access to electricity. So when you look at that, the world is decarbonizing off the back of this continent as usual. But we should be asking ourselves this question: why are we allowing that to happen in 2024? Why is the DRC, for example, not beneficiating that cobalt locally? Why aren't we exporting it locally onto the African, various African countries that exist here? We've got the Africa Free Trade Agreement. What has come of it? I think as a continent, we need to move beyond rhetoric. We all know what needs to be done. We now need to get to the doing.
Energy needs and inclusion will certainly be sorted if Africa's high capital costs that hinder investment in clean energy and inefficient grids and insufficient interconnections that create bottlenecks for renewable energy projects are addressed. And that's our Innovator Highlight this week. Very well then, now you know what they are up to and how they are impacting your lives on a daily basis. Again, that they are not necessarily startups, but this would be the best category to feature them in. Let's now take the tech tip of the week from Duncan and close the show at that point.
Hi guys, and welcome to this week's tech tip of the week. Today I'm going to be sharing with you tips that are going to boost your phone's battery life. Number 1 is turning on dark mode. You can find this setting in your display settings and you can turn it on there. This is not only good for your eyes, but also increases battery life. Number 2 is turning on automatic brightness, and you can also find this in the display settings. This helps reduce brightness in low light situations, and it is also as well good for your eyes. Number 3 is reducing your screen's refresh rate. Most phones these days usually refresh at 120 Hz, and obviously this consumes more battery life. So just go to your display settings and switch the refresh rate to 60 Hz. And lastly, for this video, make sure that you turn off location services. This usually consumes a lot of battery. I recommend you turn on location services only when you need it, but otherwise you can turn it off and this will extend battery life.
Very well, thank you Duncan for that. I hope you now have a reason to take part in the great future of African fintech and play a part, albeit one way or another. That's why we ended up right here on TECHOVER. Always a pleasure having you, and thank you for making time. My name is Brian Jojotino. Stay techie and may tech live forever.